Good morning and welcome to the Killik & Co market update. Financial news this week has been dominated by so-called Liberation Day. After markets closed on Wednesday, Donald Trump announced a new series of tariffs on imports into the US. All countries will be subject to a minimum tariff of 10%, which is being referred to as the baseline tariff. But many countries will be subject to much higher tariffs. Overall, the measures went further than investors expected, and that led to a sell-off in global markets, including US markets. This chart shows how some key global indices have moved over the course of this year to date. The MSCI World is in the black, the Nasdaq Composite in the pink, the S&P 500 in the purple, and Japan's Nikkei 225 in the green. All have dropped significantly this week. There has been a fair bit of confusion over how the US has calculated what level of tariffs to apply to different countries. The tariffs are largely based on the level of trade deficit that exists between each country and the US. If a country exports a lot to the US and doesn't import much from the US, that country will have been hit with a high tariff. A few examples on the screen here. Vietnam has been hit with a 46% tariff. Labour in Vietnam is cheap, and a lot of US companies produce goods there and then bring them into the US. Apple, for example, has been moving production out of China and into Vietnam. Bangladesh will be subject to a 37% tariff. Bangladesh is another country with very cheap labour, and a lot of clothing companies produce their products there. The EU, towards the bottom of the table there, exports a lot of cars, luxury goods and wines to the US. The tariff applied there will be 20%. The UK actually has a trade surplus with the US. It imports more than it exports. In 2024, the UK imported $79.9 billion worth of goods from the US, but only exported $68.1 billion of goods to the US. The UK has therefore been hit with the standard baseline tariff of 10% that is being applied to all countries, but no additional tariffs on top of this. Liberation Day resulted in a lot of market movements for currencies, commodities, shares and bonds. First up, we saw a notable weakening of the dollar. On this chart, we're showing the dollar-sterling exchange rate in the pink and the dollar-euro exchange rate in the green. And you'll see that the dollar has weakened against both over the last few days. The dollar has previously been viewed as a safe haven, but it's likely that the latest actions of Trump have reduced the appeal of holding dollars. We also saw a big fall in oil prices this week. Here's Brent crude over the last year. It dropped over 6% in a single day this week. Oil demand and therefore oil prices tend to be higher when economic growth is strong, and this week's fall in the oil price suggests that many expect a period of slower growth. And here are some of the biggest share price moves we saw over the first trading day after the tariffs were announced. Apple was down 9.3%. As we said earlier, Apple produces a lot in China and will be subject to the high tariff there. Nike makes a lot of clothes in Bangladesh, and Standard Chartered is an emerging markets bank with a focus on Asia, so any slowdown in Asia resulting from the tariffs will likely harm its profits. There were also some gainers on the day. UK-listed drinks giant Diageo was up 1%, and this was likely a bit of a relief rally. Diageo exports to the US, and many feared a worse tariff than 10%. And then UK-listed AstraZeneca gained 3% after it was confirmed that pharmaceutical companies would not be subject to tariffs at this time. And then energy giant SSE was up 6.7%. It did publish a reassuring trading update this week, but it's also likely that it's viewed as a bit of a safe haven, given that it's UK listed and it makes all its revenue from the UK and Ireland. And lastly, we've seen investors moving into safe haven investments this week, which is often the case in times of equity market volatility. The price of gold has hit a new record high. Here's the one-year chart. An ounce of gold is now over $3,100. The dollar weakness is likely contributing to this. Gold only trades in dollars, so when the dollar is weaker, gold becomes more affordable. Investors have also been moving into government bonds. As an example, here's the price of a specific US government bond that pays an annual coupon of 3.875% and will mature in August 2034 at a price of 100. Just look at how the price has risen over the last week. Please do give us a call if you'd like to talk about this week's market movements in more detail. Moving on to have a look at next week, we're expecting results out from Tesco and JP Morgan. That's it from us. Have a great weekend, and we look forward to seeing you next Friday.